Hey there traders, welcome back for episode number 117 from the StockBandit.tv. It's a place you can always find trading videos to make you better, and on Sundays we always take a look at the major averages and some key levels to be watching for in the week ahead. So last week I pointed out how the NASDAQ had fallen out of this trading range that it was in for several weeks. Obviously we had rolled over out of that range and had come right down here to finish at the 2205 level. That was an interesting level because it was the top end of this trading range that extended from November and into December. So that prior resistance then became some short-term support. Well, last week we did do some consolidating around that level. We kind of crisscrossed it for several days before a decisive move lower on Thursday, followed by more weakness on Friday. So at this point, we've had a couple of measured moves. Basically, take a look at the height of this range right here. It's just right around 60 points. The sell-off, once we broke the low end of that range, carried us about 60 points lower to this prior key level at 2205. Well, last week we took down another 60 points or so, and we came right down and we tested none other than the low end of this trading range from November to December, which is the 2140 area. And interestingly enough, 2140 on the nose was the low on Friday of last week. Take a look at all these big volume spikes as well. You'll note that each one of them are red. So we're getting heavy distribution on this turnaround to the downside after failing at this upper resistance here just a few weeks ago. And it really looks like this market is undergoing a major change of character. Not only have we changed directions in the short term, but the dip buyers are not stepping in to provide support on the way down. We're not seeing a bounce yet, and we're basically coming down to these key levels, briefly testing them and then breaking them. So we've seen that take place a couple of times now. It's going to be really interesting to see this week if this 2140 level is able to hold. Now, if we're not able to see that level hold for the NASDAQ, then the next low to keep an eye on here is from late October, early November. In fact, let's just get a date there. It's November 2nd there. So 2024 is the low set then. That's the prior low that we would would be the next stop if we did see a continued downdraft in this market. Now, at the same time, we have come down a considerable distance here in just a couple of weeks, and so to see us just give up another 120 points or so to come down to this 2024 level would be somewhat surprising without a bounce. But at this point, there is no bounce yet, and we're just going to be on watch to see if this market is able to put together some kind of a rebound, and if that does occur, or when that does occur, how does it stack up against the highs that we set? Okay, if we bounce back up to some area, who knows where it is, but if it's short of this high that we set in January, then of course this market may be poised for a lower high and therefore maybe a little bit longer lasting change of direction. So it's going to be a very critical next few weeks. For the S&P 500, this index came down and was resting right here at this prior resistance, and it did undercut that. And then last week I pointed out this 1084 level, which was very key, and we obviously broke through that late in the week. Obviously on Thursday we tested it to the downside. We finished right on the nose there at 1084, and then Friday we did move on south again on a spike in volume. So take a look at all these volume spikes on the downside. That just implies, once again, pretty heavy participation on the selling side, much less than just the decline that we're seeing in price, but clearly there's serious distribution occurring here. So next stop for the S&P 500 is right here. That's the 1030 level. That's the prior low, and we've got some room between now and then. However, once again, we have come down a considerable distance here in the very short term, so some kind of a bounce may come along, and we need to be on our toes watching for that, while also trading very short term in the direction of the trend, which currently is down. We've got a sell-off, we've got some consolidation here, and we're seeing some continuation on the downside after that initial move off the 1150 high. For the Dow, this index broke this long yellow uptrend line that goes all the way back to March of 09. So, long-standing uptrend line really had been marking the pace of this advance. Not only did it undercut that and not look back, but we were able to consolidate some last week, and then we did move on down through this prior level right here, 10,120. So finishing last Friday at 10,067 and change. Here again, volume spikes occurring on the downside, and it looks like this index, as the grandfather of them all, is still heading lower in search of buyers. So next level is going to be about the 98.50 level. It's kind of right in here. That was a prior resistance there, and then moving on through that would be this 96.80 level, which is this prior low set back in same date, November 2nd, right in here. So plenty of room to the downside to continue lower after this initial move, and some basing action and some continuation now starting to occur. But the bulls have yet to defend this sell-off, and at some point they're probably going to give that a shot. We need to be on our toes, pay very close attention for signs that maybe this downward move might be getting a little bit extended in the short term, but it really is starting to be a different type of market than we've seen for the past 10 months, and that's a good thing. There should be plenty of opportunities on both sides of the tape in the weeks and months ahead, so I definitely, as a trader, am looking forward to it, and I'm excited about that. So have a great night and trade well this week. I appreciate you joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.